Hi everybody, Alex Deployer from Expert Forex, and in today's video we're going to be talking about spread volatility, and it is possibly something that a lot of traders don't pay attention to whatsoever, but it is a critical factor in currency selection, but also time of day trading factors that you need to take into account. So let's dive straight into it. Now, trade volatility is something that we measure in our currency selection robot, and on your screen you can see it highlighted on our web page, and that is a tool that I use to get this information about spread volatility. So you can purchase this EA from our website, as you can see on your screen. Alternatively, it is a benefit 14 of our paid member forum, and as you can see there, you can download the currency selector robot, but you can also download the 360-degree market view robot as well as the daily pivot trading robot. So there's a lot of free robots that you can download once you are a member of our paid premium forum. So let's get into the topic of today's discussion. As you know, I've got many profiles in my trading charts, and one of the first profiles there is the currency selector tool that I use, and let's go and have a look at the currency selector tool. And here it is, and here is the part of the tool that I want to discuss today. And as you can see, there's a special tab for spread volatility. So let's have a look how we analyze spread volatility. So basically, if you take this first one here, the Aussie USD, we have a look at what is the minimum charge rendered by this particular broker for trading the Oz. Then we look at the maximum charge, and you can see there's a huge jump there. And then we look at the average charge raised by the broker. So that's critical information, and that's information that's not generally available on your MetaTrader platform. So this is quite critical, because why do these brokers push the spreads up so high? There are three main areas where they do push this up. When there's an important announcement, they don't want traders to trade, so they would push the spreads up to a point where they're discouraging trading in that particular area. Over weekends, they also tend to push the spreads up. It's all areas that they don't want people to trade. Well, over a weekend you can't, but they make sure by increasing the spreads tremendously. And then one area that a lot of people don't know about is that most brokers have a period at midnight where they close off their trading and they reconcile their accounts, and for 5 minutes there's a period that they don't want people to trade, and they would increase the spreads over that particular period. So there are periods that happen, and the announcement one is a difficult one because there are many announcements that occur every day. Now, if you were to enter a trade at that time, you would pay that maximum pip spread, which is quite a big number. And what we do is we convert it into dollars, and we say, you know, the cheapest you can pay for spread when trading the Oz on a full lot is $6. But if you were unfortunate to trade it at the wrong time, you would be paying $60. Now, that's a huge amount, but on average, you would pay $8. So this gives us a good idea of the cost of trading that particular currency at the wrong time. And also, we then create a ratio which says what is the maximum percent as a percentage of the normal or the average spread, and you can then see that there. And then this column, as you can see, it has been sorted from the highest value to the lowest value. So as you can see there, the Oz is the worst because the maximum spread is so much higher than the average spread. Now, if we go down this column and you look at the New Zealand USD, which is basically its neighbor, you can see that the maximum spread was $4, 4 pips, and the average spread was 2.8 spread. So the percentage of the maximum compared to the average is actually quite a lot lower than the Oz. So when you're selecting a currency to trade, this is just one of the factors that you need to take into account. And what you would say is, I'd rather trade the New Zealand USD than the Oz because there's more stability in the spread. And as you can see, the minimum is 1.8. The average is 2.8 for the New Zealand, and then 4. So that's the most stable currency, or that is one of the most stable currencies to trade. In fact, there is an argument, and I will make a video about this, that the New Zealand USD is in fact the best currency that you can trade from many perspectives. Now, as you can see, this tool also looks at the swap and margin cost, the weekly volatility of the currencies, the spread factors, what the spread costs are, and also the trendiness of a particular currency. How much does it trend compared to the other currency? So the currency selector is a very valuable tool. I won't go into that, but if you want more information, what I suggest you do, go to our website where the currency selector is showcased, and just scroll down and read more about it. But what is good about it, there are 6 training videos, so you can actually go and learn what this currency selector does and why it is such an important tool. And it is actually the tool that divides winners from losers, because there's no worse thing that you can do than trade the wrong currency using the wrong strategy. You cannot trade a trending and expensive currency when using a sideways strategy, and you cannot trade a sideways and expensive currency when using a trending currency. And that is one fundamental mistake that losing traders make. Now, I hope you've enjoyed this video, and I hope I've made you aware of the more advanced factors that winning traders take into account very seriously, and that losers or beginner traders have no idea about. From me, Alex Deploy, cheerio.